What happened with the spot prices or the spot price spread a few days ago? London gold market seemed to have closed down due to the coronavirus, and we've seen some breaking in the spot price spread.
Exactly. So one of the things which I think preceded this additional increase of $9 to $10 per ounce by the banks is the fact that the LBMA market basically was shut and got closed down, and at the same time, the big refineries in Switzerland got shut down. In both cases because of coronavirus. Now, suddenly, that market fell away, and what you have to understand is there's the price of gold. It kind of moves from one market to another. Yeah. So it kind of starts with Tokyo in Asia in the morning, then it moves over to Europe, with London really being the primary market. Then it moves over to New York and Chicago and so on, and the trading goes on. But at the same time, there are futures being traded almost 24/7, and that's called Globex, future contracts. And the future contracts is basically just another way of saying people buying and selling gold prices while the main markets are closed. And they normally align perfectly, because whenever a market opens, people can essentially arbitrage away that difference and make sure the two match. Now, what happened, my understanding of what happened a few days ago, is that that arbitrage stopped. When London suddenly stopped operating, some price feeds that bullion dealers have were actually based from Globex, meaning the future exchange, and some were based from the spot price of NYMEX. And what happened is it was no longer possible to ship bars from one location to another one. And therefore, because it had to be for delivery, that arbitrage fell away. And suddenly there was a price divergence between the future prices and the spot prices. And that was as much as $60, which is almost 4%. And so for a little while, 2 days ago, we essentially saw some bullion dealers having $60 higher spot prices than others, including very large ones, including, from my understanding, even Kitco had the higher prices. And for a while, we didn't know at first which one is the right price. And we have people in the industries which are on these exchanges that said they've never seen something like this. So essentially, that is why that uncertainty and the fact that some of the suppliers in these markets are now closed are essentially making everybody more nervous. And it's causing the banks, which earlier was making a very tight spread on gold and silver for hedging of the refineries, to now say, if you want to hedge any gold position, you have to pay an additional $10. The refineries are then going to pass that cost on to essentially the bullion dealers, which then have to pass it on to the public. So essentially, in a strange way, the bankers are increasing the price of gold bullion now because of what is happening.